Welcome to The Explainer. Today, we are going to dive into money, specifically the language of business finance. You know that feeling when you hear corporate executives tossing around financial jargon and it sounds like absolute gibberish? Well, it kind of is. But just like any foreign language, once you nail down the basic vocabulary and the grammar, this whole new world just completely opens up to you. Let's get right into it.
Picture this. You're running a business. It feels amazing, right? Customers are rolling in, they're buying what you're selling, cash is moving. But then the bills start piling up, and you're constantly scrambling to figure out your actual profits. In the middle of all that daily chaos, you really have to stop and ask yourself one fundamental question. How do you actually know if your business is making money? And that is exactly where business finance swoops in, helping you manage your cash, dodge those catastrophic mistakes, and actually grow.
Here's our game plan for today. We'll start with the language of business, break down the 3 core statements, learn some key financial vocabulary, talk about why cash is absolutely king, and wrap it all up with smart financial decision-making.
All right, Section 1, the language of business. Let's define the basics.
At its core, business finance is simply the process of planning and controlling a company's money. It's the tool we use to answer the make-or-break questions. How much cash do we actually have sitting in the bank? How much are we burning through? Are we genuinely making a profit or just spinning our wheels? And crucially, can we afford to expand? Without a solid grasp on these answers, even a bustling, wildly popular company can totally go under.
Moving right along to Section 2, the 3 core statements. Basically, the grammar of our financial language.
First up, we have the income statement. The big takeaway here is that it simply takes your revenue, subtracts your expenses, and reveals your profit over a set period. Think of it as your financial scoreboard for a specific quarter or year. It tells you, in black and white, did the business actually make a profit, or did it take a hit during that exact time frame?
Next is the balance sheet. Now, unlike the income statement, which covers a stretch of time, the balance sheet gives you a frozen snapshot of exactly where you stand at a single moment. It shows your assets, which are the things the company owns. It shows your liabilities, the debts the company owes. And finally, it calculates the equity, which is the owner's true slice of the pie once you balance what's owned against what's owed.
And the third piece of the puzzle is the cash flow statement. Now, this one highlights a harsh reality that trips up so many beginners. Profit does not always equal cash. This statement tracks the literal physical money moving into and out of your bank accounts. It's a huge deal because a company can look incredibly profitable on paper, but still run completely dry on actual cash.
Okay, Section 3, Key Financial Vocabulary. Time to learn the alphabet.
The math here is honestly incredibly simple when you strip it down. You're just comparing your earned sales revenue directly against your running costs. Revenue is the money flowing in from sales. Costs are what you spend to keep the lights on. And profit? That's just what's left over. So say you sell $1,000 worth of product and your expenses are $700. Boom, your profit is $300. Really simple, right? The entire goal of a business basically boils down to this. Push that revenue up while keeping a really tight lid on your costs.
And that simple math naturally leads us to assets and liabilities. Assets are what pump value into your business. We're talking cash on hand, physical buildings, equipment, your inventory. Liabilities, on the other hand, are what you owe to other people. Bank loans, unpaid supplier bills, and general debts. A truly healthy company usually has this beautiful balance of strong, valuable assets offsetting manageable liabilities.
Which brings us to Section 4, why cash is king, the ultimate truth of business.
Walk through this slightly terrifying timeline with me, because this is exactly where so many businesses crash and burn. Day 1, you crush it. You make a massive $100,000 sale. Awesome. On paper, your income statement looks phenomenal. But then we hit day 5. The reality of running a business kicks in. Rent is due and payroll has to go out today. The catch? Those customers from day 1 are paying on a 60-day term. You aren't seeing a single dime of their cash for 2 full months.
So in that scenario, sure, you're technically profitable, but you literally do not have the cash in the bank to pay your team today. It's because of that brutal 60-day delay that financial pros live by one simple rule: cash is king. Profit is a nice theory on paper, but actual, tangible cash flow, that is the oxygen your business needs to survive.
Finally, Section 5, Smart Financial Decision-Making. Time to apply what we've learned.
You see, good financial analysis isn't just about staring in the rearview mirror at what already happened. It's about looking forward. It gives you the power to confidently answer massive, game-changing questions. Should we hire more people? Does our cash flow actually let us buy that new equipment? Are our profits strong enough to open store number 2? Can we go big on marketing? Fluency in these statements means choosing the absolute best, data-driven path for growth.
The core takeaway here is that understanding revenue, expenses, profit, assets, liabilities, and cash flow, it isn't just stuff for the accounting department. It's the literal foundation of making smart, informed choices. And honestly, the better you understand business finance, the better decisions you're going to make, not just in business, but in your own life. Every successful business speaks this one language fluently.
Now, if all this still feels a little bit intimidating, just keep this awesome reminder from our source material in the back of your mind. Every financial expert was once a beginner. Nobody is born knowing how to read a balance sheet or calculate a cash flow statement. It's just a tool. It's a language, and absolutely anyone can learn it with a little bit of focus.
So, now that you've got the basic grammar and vocabulary down, it is time to take these tools and really start analyzing the financial world around you. Next time you see a wildly successful company, don't just look at their shiny new products. Ask yourself, what do their assets look like? How on earth are they managing their cash flow delays? What's going on behind the scenes? So, what about you? Are you ready to speak the language of money fluently?